Hey everyone, welcome back to Corporate Decoder, the place where we unravel the hidden secrets within corporate filings. Today, Goldman Sachs BDC Inc. dropped some news, and let's just say their dividends are getting a little more interesting, but there's always more to the story than just the payout. So what exactly is Goldman Sachs BDC Inc.? We're talking about a company that's essentially a publicly traded investment fund. They invest in debt mostly for middle market companies, the kind of businesses that are often too big for small local banks but not quite big enough for the mega corporations. Think of them as a lender for the mega corporations. Think of them as a lender for the backbone of the economy, and their stock is traded on the New York Stock Exchange under the ticker GSBD. Now, the big news on August 7, 2025 revolves around their financial results for the second quarter, which ended on June 30, 2025. They put out a press release to share these updates, and that's what we're going to dig into. This press release, Exhibit 99.1, is the heart of today's report. It's not being filed in a way that makes them strictly liable under certain sections of the law, but let's be honest, these are the numbers the market watches. Under this item, they're talking about their financial performance. It's important to understand that when companies announce their results, they're trying to give investors a clear picture of how they're doing. This includes how much money they're making, how much it costs them to operate, and ultimately their profitability. For a company like Goldman Sachs BDC, their success is tied to their ability to manage their investments effectively and generate a steady income. While the filing itself doesn't give us the detailed financial tables directly in this section, it points us to the press release, which does. We're always looking for the key metrics that tell us if the company is healthy and growing. This includes things like net investment income, earnings per share, and the value of their assets under management. This part is all about transparency, making sure everyone gets the same information at the same time. And here we see some very specific announcements about dividends. Dividends are essentially a way for companies to share their profits with shareholders. They announced a supplemental dividend for the second quarter of 2025, which is $0.0303 supplemental dividend, is set to be paid out around September 15, 2025 to shareholders who own the stock as of August 29, 2025. But that's not all. They're also talking about their upcoming third quarter dividends. The base dividend for the third quarter of 2025 is 0 twint per share. Pers of Tindu 2025 is Euro Tint $30.28 2025 to shareholders of record as of September 30, 2025. To shareholders of record as of September 30, 2025. To shareholders of record as of September 30, 2025. To shareholders of record as of September 30, 2025. Now let's talk about what this means. Goldman Sachs BDC is paying out these dividends, which is generally good news for shareholders. It shows the company is generating enough cash to reward its investors. The base dividend is usually a regular predictable payment, while the special dividend is usually a regular predictable payment, while the special dividend can be an extra bonus. This mix suggests they're confident in their current earnings and maybe even have some extra cash flow they want to distribute. From a Warren Buffett perspective, we look for companies that not only have strong earnings, but also a sensible approach to returning capital to shareholders. A consistent dividend, especially when supplemented, can be a sign of financial health. The inclusion of the cover page interactive data file means all the important information is likely formatted in a way that computers can easily read and process, making it easier for analysts and investors to get the data they need quickly. Now, the signatures at the end are a formality confirming that authorized people at the company have reviewed and approved this report. Vivek Bantwal and David Miller, both co-chief executive officers, have signed off on this. This tells us who is ultimately responsible for the information being presented. So what's the big picture here? Goldman Sachs BDC is reporting its second quarter results and announcing its upcoming dividends. The increase in dividends, particularly the special dividend, points towards a positive performance in the second quarter. However, without the actual financial tables from the press release being detailed here, we're only seeing the highlights. A deeper dive would require examining their net investment income, changes in their portfolio's fair value, and their debt levels. Are they taking on too much debt to fund these dividends, or is this a result of smart investing and strong returns? That's the real story we'd want to uncover. Looking at the company's overall direction, Goldman Sachs BDC operates in a specialized sector of finance. Their success hinges on their ability to identify and invest in profitable debt opportunities while managing risk. The consistent dividend payouts suggest they are doing a decent job of this, but the devil is always in the details of their portfolio performance and their cost of capital. A key risk for any business development company like this is interest rate sensitivity. If interest rates rise significantly, their borrowing costs could increase, impacting their profitability, especially if their loan portfolio isn't structured to benefit from higher rates. Another risk is the credit quality of the companies they lend to. If those businesses struggle, Goldman Sachs BDC could face loan defaults leading to losses. On the opportunity side, as the economy grows, there's a greater need for the kind of financing these BDCs provide. If they can effectively navigate the market and deploy capital wisely, they can continue to generate attractive returns. The competitive landscape is also important. They're up against other BDCs and various forms of private credit providers. In conclusion, Goldman Sachs BDC seems to be on a solid footing, rewarding its shareholders with increased dividends. However, like any investment, there are inherent risks to consider, particularly around economic conditions and the performance of their underlying investments. It's always wise to look beyond the headline dividend announcement and understand the financial mechanics driving those payments. Alright, that's our breakdown of Goldman Sachs BDC's latest filing. What's your take on these dividend announcements and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.